Welcome to the Deep Dive. Today we're taking a close look at the upcoming initial public offering of Ather Energy.
That's right.
If you're following the Indian EV scene, you know Ather, they're the ones behind those, really sharp-looking electric two-wheelers like the 450X, the
The
450F,
more accessible one. Yeah.
and their newer family scooter, the Rizta. Plus, they've built out that pretty impressive Ather grid charging network.
Exactly. Ather has definitely established themselves as a key innovator in this space. So our goal in this deep dive is to really dissect a detailed research note from DR Toxie on their IPO.
Right.
We want to get beyond just the headlines and understand, the real story, where Ather stands, the hurdles they're facing, and, well, what the prospects look like for this offering.
And the source we're digging into is the DR Toxie IPO note on Ather Energy Ltd.pdf. Dated today, April 28th, 2025.
Correct.
Okay, so let's start with the IPO itself, the nuts and bolts of this offering. What are the key dates and numbers?
Okay, so the IPO opens today, April 28th, 2025, and it closes pretty quickly on April 30th. Right. The price range they've set is between INR 304 and 321 per share.
And the total size?
The total amount they're aiming to raise is quite significant, somewhere in the ballpark of INR 29,620 million to maybe 29,808 million, so nearly 30 billion rupees.
That's a considerable sum. What's the sort of structure? How is this money being raised? Is it all new investment?
Good question. It's actually a combination. There's a fresh issue of 81.8 million new shares.
Okay, so that's new capital coming into Ather itself.
Precisely. But there's also an offer for sale, or OFS, of about 11.1 million existing shares.
Ah, so some current investors are selling off part of their stake.
Exactly. Likely some of the earlier investors taking some money off the table, which is, pretty standard, but something analysts always look at.
Yeah, worth noting. And how does this change the ownership picture?
Well, before the IPO, the promoters, the founders, and key initial backers held about 55%. Others held the remaining 45%. After this issue, the promoter's stake is expected to dilute down to around 42%, and the public and other investors will then hold about 58%.
So a definite shift towards broader public ownership then.
Absolutely.
And what does that price band imply for the company's total value once it lists the market cap?
Based on that price range, yeah, the post-IPO market capitalization is projected to be between, INR 114,616 million and INR 119,557 million. So roughly 115 to 120 billion rupees.
Okay, so nearly 30 billion coming in. What's the roadmap? Where's all this new capital going?
They've outlined it pretty clearly. A significant chunk, INR 9,272 million, is specifically tagged for capital expenditure on their new factory in Maharashtra.
Building more capacity. Makes sense.
Right. They're also planning to use about INR 400 million to repay or prepay some of their existing borrowings.
Okay, cleaning up the balance sheet a bit.
Exactly. And then there's a substantial amount, INR 7,500 million, allocated for R&D investment.
That sounds crucial for a tech-focused company like Ather.
Absolutely. Continuous innovation is key. They're also setting aside INR 3,500 million for marketing and sales promotion initiatives.
Getting the word out, expanding reach.
Yep. And the remaining amount, around INR 5,588 million, is earmarked for, quote, general corporate purposes, which is kind of a catch-all for working capital and other operational needs.
Got it. And how is the offering split between different types of investors?
It follows the standard SEBI regulations. So the qualified institutional buyers, the QIBs, think mutual funds, insurance companies.
Big players.
Yeah, the big players. They get allocated at least 75% of the net offer. The non-institutional buyers, or NIBs, high net worth individuals, corporates, they receive no more than 15%. And then for retail individual investors, like you and me potentially, the allocation is capped at 10%.
Okay, so mostly institutional money driving this. And when do we expect the shares to actually start trading?
The anticipated listing date on the exchanges is May 6, 2025, so quite soon after the offer closes.
And who are the investment banks leading this whole process? The BRLMs.
The book-running lead managers, yes, it's a consortium: Axis Capital, HSBC Securities, JM Financial, and Nomura Financial Advisory.
Okay, quite a roster. That gives us a really clear picture of the IPO structure itself. Now, let's maybe zoom out a bit and talk more about Ather Energy as a company, the products, the whole ecosystem they've built.
Sure. So as we mentioned, Ather isn't just selling scooters. They're involved in, well, the whole chain: design, engineering, manufacturing, and crucially, the charging infrastructure.
Right.
Their initial splash really came with the Ather 450 series. You had the 450X, the 450S, and that top-end 450 Apex.
Known for being, quote, premium stylish.
And packed with tech. Proprietary battery packs, fast charging, those connected dashboards with navigation, over-the-air updates. That was quite revolutionary when it first came out.
The 450X has that really punchy warp mode, doesn't it, and Bluetooth features.
It does, and the Apex model pushed performance even further with things like Magic Twist for enhanced regenerative braking. The 450S, while positioned as more accessible,
Their entry point, sort of.
exactly. It still offers a modern experience with its deep view dashboard, still quite connected.
But they realized they needed something beyond just performance. Right. For the broader market.
Absolutely. The launch of the Ather last year, April 2024, was a very significant move into the family scooter segment.
A different focus entirely.
Completely. It emphasizes comfort, practicality. It boasts a massive 56 liters of storage space under the seat and over the floorboard combined.
Wow, 56 liters is a lot.
It really is. And it includes practical features like traction control, which is great for varying road conditions, Alexa integration.
Voice commands are.
Yeah, and even WhatsApp alerts popping up on the dashboard. And the market seems to have responded well. The note says by December 2024, they had already sold over 56,000 Ristas.
That's pretty strong initial traction for a new segment.
It suggests they tapped into a real need.
And a huge part of their proposition is the charging network, the Ather grid. That's been a big differentiator, hasn't it?
Oh, definitely. It's currently India's largest public fast charging network, specifically for electric two-wheelers. The numbers are impressive. Over 2,600 fast chargers, plus another 666 neighborhood chargers.
That's across how many cities?
Across 314 cities in India, and they've even expanded into Nepal and Sri Lanka.
Right.
And significantly, their charging connector standard, LECCS, has actually been adopted as a national standard by the Bureau of Indian Standards.
That's huge. That could really help with interoperability down the line.
Potentially, yes. It's a big endorsement. And they've also formed strategic partnerships, like with Hero MotoCorp for charging access, and integrated the grid locations into Google Maps.
Making it easy to find a charge.
Yes.
It's all about that user experience, that ecosystem.
Precisely. And underpinning a lot of that experience is their software platform, Ather.
Right, the brains of the operation.
Kind of, yeah. It's their in-house developed platform powering the vehicles, the mobile apps, connected accessories. The note mentions it had 69 different features as of December 2024.
Covering navigation, safety, diagnostics.
All of that. And many of the advanced features are bundled into their Pro Pack subscription. Things like ride assist features, hill hold, Ather Connect for deeper vehicle insights, remote monitoring, and crucially, those over-the-air software updates.
Like AtherStack 6.0, which brought a new UI, Alexa, WhatsApp. I saw they even added a Hindi interface.
They did, yeah, catering to regional needs. It's important to remember, though, that while some features are included initially, ongoing access to things like Ather Connect requires a subscription after the first 3 years.
Ah, so a recurring revenue model built in?
That's definitely part of the strategy, growing those software service revenues.
And it's not just software. They also sell physical accessories, right?
Yes, and this seems to be a growing high-margin area for them. Things like portable tire inflators, tire pressure monitoring systems, TPMS, scooter covers.
Practical stuff.
And even smart helmets. They have the Halo and Halo Bit, offering features like built-in audio and even helmet-to-helmet communication. And the revenue growth here is quite stark, from just, INR 4 million in FY22 up to INR 251 million in just the first 9 months of FY25.
Oh, that's a big jump. People are clearly buying into the ecosystem add-ons.
Seems so. It helps build out multiple revenue streams.
So looking ahead, what's next on the vehicle front? Are they sticking just to scooters?
No, they're actively developing 2 new modular EV platforms. The goals are, 1, to improve cost efficiency in manufacturing through shared components.
Economies of scale.
Right. And 2, to enable expansion. Not just more scooter models, but significantly they're planning to enter the electric motorcycle segment.
Now, that could be a game changer, opening up a much larger market potentially.
You really could.
Okay, let's shift gears then and talk about how they actually build these things. Their manufacturing setup and R&D capabilities. What's under the hood, so to speak?
Well, Ather has taken a pretty vertically integrated approach, which is quite interesting. They actually design about 80% of their key components in-house.
80%? Like what?
Yeah, critical stuff, the battery packs themselves, the crucial battery management system, or BMS.
Vital for safety and performance.
Absolutely. Also the vehicle chassis, the onboard electronics, and of course their AtherStack software platform we just discussed.
That level of in-house control must give them advantages, maybe in quality, maybe speed of innovation.
It certainly can. It allows for tighter integration and potentially faster iteration. They even manufacture their own battery packs using lithium-ion cells they source from suppliers.
They assemble the packs themselves.
Yes, and the note highlights that as of December 2024, these in-house packs made up a significant chunk between 29% and 32% of the total bill of materials for the Ather 450X.
That's a substantial portion. Does this vertical integration have downsides too? Maybe higher initial investment?
It definitely requires significant upfront capital and expertise, and, it could potentially make them a bit less flexible in adopting, say, a breakthrough battery tech developed by a specialized external supplier. It's a
Yeah.
trade-off.
Yeah. And their main manufacturing base is in Hosur, Tamil Nadu.
That's right. The Hoser facility currently has an installed annual capacity of around 500,000 electric two-wheelers.
0.5 million units.
Yeah, and about 0.38 million battery packs per year. It's described as a modern plant, quite automated, uses solar power,
Good for sustainability.
and apparently operates with zero sewage discharge, which is impressive. The report also details their actual production numbers model-wise from FY22 up to the first 9 months of FY25, showing that growth curve.
But they're not stopping at Hosur, are they? You mentioned a new factory.
Correct. That's the big expansion project Factory 3.0 in Maharashtra. It's planned as a phased development.
Aiming for.
The long-term goal is a total annual capacity of 1.5 million units. The idea is to internalize even more manufacturing processes there and achieve greater cost efficiencies as they scale up production significantly.
1.5 million capacity. That's ambitious.
Yeah.
And what about the R&D side that feeds into all this?
They seem heavily invested there, too. They operate 3 dedicated R&D facilities, all located in Bangalore.
Focusing on.
Things like rigorous in-house testing, product validation, durability studies, advanced electronics simulation, all the stuff you need to ensure reliability and push the technology forward.
So, strong R&D is clearly core to their identity and strategy.
Essential for staying ahead, reducing reliance on external tech, and building that robust product.
All right, let's move on to, well, perhaps the most scrutinized part of any IPO, the financials and the valuation. How did the numbers stack up?
Okay, looking at the financials provided in the DR Choksi note, revenue growth is definitely a highlight. They went from about INR 4.1 billion in FY22 to over INR 17.5 billion in FY24.
That's strong top-line growth.
Very strong. And in the first 9 months of this fiscal year, FY25, they'd already clocked nearly INR 15.8 billion, so still growing fast.
But what about the bottom line, profitability?
Ah, yes.
Yeah.
That's the other side of the coin. The report clearly shows they've been consistently loss-making. The profit after tax, or PAT, for those first 9 months of FY25 was a loss of nearly INR 5.8 billion.
Still significantly in the red then. Is there any improvement, though? Are the margins getting better?
Yes, that's the positive trend the report points to. While profitability hasn't been achieved yet, the underlying performance metrics are improving. Both their EBITDA margin,
Earnings before interest, taxes, depreciation, amortization.
right, that improved quite a bit, from a negative 64% in FY22 to a negative 26% in the first 9 months of FY25.
Okay, so the loss relative to earnings is shrinking.
Exactly. And similarly, the PIT margin improved from negative 84% to negative 37% over that same period. So the trajectory is towards reduced losses, but they're not there yet.
What about their net worth?
Their net worth assets minus liabilities has fluctuated a bit, partly due to funding rounds and losses, but it stood at around INR 1.1 billion at the end of 9M FY25. But naturally, with the ongoing losses, their return on net worth is still negative.
So growing fast, improving margins, but still burning cash to fuel that growth. How does this financial picture translate into the IPO valuation? What's the take there?
This is where the DR Choksi report gets quite critical. They highlight that Ather's IPO is being valued at an enterprise value to sales, or EV sales, multiple of roughly 6 times, based on projected FY25 numbers.
6 times sales. How does that compare?
Well, the analysts argue this looks high, or maybe even overvalued, when you compare it to established, profitable two-wheeler companies like TVS Motor, Bajaj Auto, or Hero MotoCorp. Their EV sales multiples are considerably lower.
Because they are profitable and more mature businesses.
Right. Now, they do acknowledge that Ola Electric, another pure-play EV maker, has a somewhat comparable EV sales multiple. And Eicher Motors, maker of Royal Enfield, trades at a higher multiple, but that's a different segment profile.
So the market might be pricing in Ather's future growth potential in the EV space. A growth premium.
That's likely the justification. But the DR-Choxy analysts, given the current lack of profitability, seem to feel that premium is too steep right now.
And that leads to their final recommendation on the IPO.
Yes. Based primarily on this valuation concern, the DR-Choxy IPO note assigns an avoid rating to the Ather Energy IPO.
Avoid. That's pretty unambiguous.
It is. Their reasoning is essentially that the valuation doesn't adequately compensate for the current financial performance and the risks associated with a loss-making company.
So they're suggesting maybe wait and see.
They suggest that investors interested in Ather might find a better entry point, a more favorable valuation perhaps, by buying the shares in the secondary market after the IPO listing rather than subscribing to the IPO itself at this price. They see the potential, just not at this IPO price.
Right. Potential versus current price.
Yeah.
That's a very clear stance from the report. Let's take that step back again now and look at the wider industry context. India's EV market, Ather's position. What's the big picture?
Well, as you know, India is just massive when it comes to two-wheelers, the world's largest market by volume.
Absolutely.
Historically, the segment grew strongly, especially in the decade before FY19. But the real story now is the shift, the transition from internal combustion engines, ICE, to electric vehicles, EVs.
And that shift is happening fast.
Incredibly fast, especially in two-wheelers. Between FY19 and FY24, the retail sales volume of electric two-wheelers grew at a compound annual growth rate, a CAGR, of over 100%.
Wow. 101.7% CAGR. Although, starting from a low base, right?
True, starting low, but the momentum is undeniable. And projections suggest EVs could capture around 35% of the total two-wheeler market by FY31. That's huge potential for growth ahead.
What's driving that? Is it just environmental concerns?
That's part of it, but economics play a massive role. A key factor is the falling cost of batteries.
Right, the most expensive component.
Exactly. Lithium-ion battery cell and pack prices have been steadily declining globally thanks to technology improvements, scale. Forecasts suggest they could fall further, maybe to around $80 per kilowatt hour by 2030.
Making EVs cheaper to buy up front.
Eventually, yes. But even now, it dramatically impacts the running costs. Plus, government incentives have played a big part so far.
Like the FAME schemes?
Yes, FAME I and FAME II provided significant subsidies. Now there are newer schemes like EMPS and the PM eDrive program, while the level of support might be tapering.
Which is a risk factor we should probably discuss later.
Definitely. But even with reduced subsidies, the total cost of ownership, or TCO, for EVs is becoming increasingly favorable compared to petrol scooters.
Because electricity is cheaper than fuel and maintenance is lower.
Precisely. Lower running costs are a big draw. And as battery costs fall, that upfront purchase price gap between EVs and ICE vehicles is expected to keep narrowing.
So in this booming, shifting market, where does Ather actually sit? What's their market share?
According to the report, as of FY24, Ather Energy held an 11.5% market share in the Indian electric two-wheeler segment based on retail sales volume.
11.5%. That makes them
The third largest player in the E2W market in India currently, so they've carved out a significant position already.
Okay, number 3. Interesting. Now let's look forward. What are Ather's specific plans, their strategies for growth, and what are the potential bumps in the road, the risks?
Their growth strategy seems multi-pronged. First, expanding distribution. They plan to use a more asset-light dealership model to grow their sales and service network across India.
Cheaper than owning all the showrooms themselves.
Right. Second, international expansion. They're already in Nepal and Sri Lanka, but they're looking at other opportunities abroad.
Taking the brand global.
Potentially. Third, and this is a big one, entering the motorcycle segment. They're developing a new platform called Zenith.
We mentioned that earlier.
Yeah, specifically targeting that popular 125cc to 300cc equivalent category. That opens up a whole new customer base.
Makes sense. What else?
Recognizing that government subsidies might not last forever or might reduce.
The papering effect.
Exactly. They aim to reduce their reliance on these subsidies over time, focusing on making the product compelling and cost competitive on its own merits.
Through innovation and cost efficiency, presumably.
And lastly, continuing to monetize their software and ecosystem, pushing those higher margin Pro Pack subscriptions and accessories we talked about. That's a key part of the long-term plan for profitability.
Right, leveraging the platform they've built. Now, what about the risks? What concerns does the DR-Choxy report highlight?
Several key risks are mentioned. Battery safety is a big one, an industry-wide concern. Any major incident involving battery fires or safety issues with Ather vehicles could severely damage their brand reputation and sales.
Absolutely critical for consumer trust.
Then there's litigation. The report notes they are involved in some. It carries inherent risks, yes.
The report also included a SWOT analysis, right? Strengths, weaknesses, opportunities, threats. Can you give us the highlights?
Sure. On the strength side, their first mover advantage in premium electric scooters, strong in-house R&D, a well-regarded premium brand image, and that scalable distribution network they're building.
Okay. Weaknesses.
Key weaknesses pointed out are a current overdependence on the South Indian market geographically, the fact they are still loss-making, limited overseas presence so far, and that historical dependence on subsidies.
Opportunities.
Big ones here. The massive overall growth potential of the Indian EV market, entering new segments like motorcycles, potential for exports, and monetizing those high-margin software and accessory services.
And threats.
The main threats include rising competition from both established auto giants entering the EV space and other EV startups, potential volatility in government policies and subsidies.
Always a factor in India.
Indeed. Supply chain risks, especially for critical components like battery cells, and that ever-present reputational risk if there are any issues like battery fires.
So a fairly balanced picture with significant pluses and some clear challenges. Lastly, the report compares Ather to its peers. Who are they benchmarking against and what stands out?
They compare Ather against a mix of players. You have the established two-wheeler manufacturers who are now seriously into EVs, TVS Motor, Bajaj Auto, Hero MotoCorp. Then you have Ola Electric, their direct EV competitor, and also Eicher Motor, mainly for the Royal Enfield comparison, possibly thinking about the future motorcycle segment.
A diverse set. What metrics do they compare?
Standard stuff. Market cap, enterprise value, revenue growth rates, profitability margins, or lack thereof, key valuation ratios, like that EV sales we discussed.
Right, where Ather looked high.
Exactly. They also look at market share in different segments and average selling price, ASP. The comparison reinforces that Ather's EV sales multiple is notably higher than most profitable peers, despite its negative margins currently.
What about their selling price compared to others?
Their ASP in FY24 was comparable to some premium ICE scooters and also similar to Ola Electric's reported figures, but significantly higher than mass market players like Hero MotoCorp. It reflects their premium positioning. The comparison basically contextualizes Ather's financial and market position within the broader competitive landscape.
Okay, so let's try and bring it all together then.
Yeah.
After digging through this Dr. Chuxy note, what are the main takeaways on Ather Energy and its IPO?
I think the key points are pretty clear. Ather Energy is undeniably a significant innovator in India's booming EV market. They've done a great job building not just products, but a whole ecosystem around them. The charging grid, the software, the accessories.
They have a strong brand and ambitious plans for the future, too, like
Yeah.
moving into motorcycles.
Definitely. The growth potential is there. However, the flip side is that they're still chasing profitability. That path remains a major challenge. And this IPO valuation. Well, according to this particular analysis from Dr. Chuxy, it just seems quite steep right now, especially when you benchmark it against established, profitable companies in the sector.
Which leads directly to that avoid rating for the IPO at this specific price point, with the suggestion that investors might get a better opportunity later in the secondary market.
That's the conclusion drawn in this specific research note based on their analysis of the financials and valuation. It reflects their current assessment.
So definitely a company with exciting potential in a hot sector, but maybe priced for perfection or even beyond at this IPO stage, according to these analysts.
That seems a fair summary of the report's view.
Okay, so here's a final thought to leave you with.
Yeah.
Considering just how incredibly fast the EV market is changing the technology, the battery costs, the regulations, consumer tastes, what do you think are the really critical long-term factors that will determine success or failure for companies like Ather, and indeed for the whole two-wheeler industry's electric transition in India? It's certainly a dynamic space to keep watching.
Absolutely. Lots to think about there.
Thanks for joining us for this deep dive.